3,000 to 988,000 from July to September. Let's try and digest a whole slew of numbers. Joining me now is Chris Williamson, the Chief Business Economist at S&P Global Market Intelligence. Chris, good to have you on the programme this morning. Let's start with those PMI numbers, probably the most important out of all those numbers we've had to look at today, showing potentially that the UK could already be in a mild recession. Is that your assessment?
That's what it's looking like at the moment, though, and the emphasis needs to be on mild. These numbers are in contraction. These indices, anything below 50, is a contraction of activity, business output compared to the prior month. So we've had 3 months now of very modest falls in output. This is worrying, obviously, and it's a big contrast to earlier in the year. We had a nice resurgence of growth in the spring, lots of travel reopening properly since the pandemic, a lot of global traffic. So everyone around the world did well, it seems, in the spring, early summer. But the UK, like its peers, like the Eurozone in particular, has seen that growth lift fade as the headwinds of the rising cost of living, higher interest rates are really coming down to bear now. So recession risks increased. But at the moment, if there is a recession, it's only looking very mild.
If we look at the numbers in a bit more detail, the all-important service sector, of course, the UK is led by the service sector, fell to a 9-month low. And if we have a look at the outlook, businesses looking pretty pessimistic about the outlook, particularly when it comes to consumer spending. And of course, we're in the run-up to Christmas. It's the all-important time of year, isn't it, for consumers to be spending? I mean, the outlook doesn't look strong, does it?
No, there is a lot of worry out there, and in particular, this fading of this sort of travel and recreation spending surge is really starting to bite, it seems. And what we're also seeing with these numbers is firms are starting to cut their staffing levels now. So we've had 2 months of falling employment, it was signalled by these surveys across manufacturing and now services as well. And that, of course, that weakening of the job market will take away a big prop to consumer spending. Consumers have been really helping sustain growth this year. And if that starts to wane, then the prospects start to look a lot bleaker. And so this is what businesses are telling us. They're saying that there's probably more pain from higher interest rates yet to come. Interest rates may have peaked, but they're still very high by historical standards, as is inflation, and that's going to continue to erode consumer spending as we go into the winter months.
And what could that do for unemployment, Chris? Because we've had the unemployment numbers, they look steady at 4.2%, but could that bigger picture change?
That's likely to change, yeah. These are really lagging indicators. They're based on the prior 3 months, and that's only up to September. So you've got a big delay in those numbers, and these PMI numbers, why people like them so much is that they are so up to date. This is October readings that we've got here, and they were signalling this second month of falling employment. So it looks like unemployment will start to edge higher. We don't think it's going to soar by any means, but it will lead to a little bit more uncertainty amongst households and cause that further pullback in spending as that caution prevails.
At the Bank of England, only a mere mile away from our Sky City studios here in central London, we'll be looking at these numbers, of course. I mean, how will this play into any interest rate decision in the future?
Well, there's a number of things that they'll be looking at. They'll be reassured in particular by some of the price gauges in this survey coming down quite nicely. So we've got inflation stuck above 6% at the moment, but this survey, it's got leading indicators of what prices will doing because it tracks things like firms' costs, how they're increasing, what their wholesale selling prices are doing. These are all coming down from that 6% odd rate down to more like 4% by the beginning of next year. So it looks like those inflationary pressures are cooling. That's going to really add to hopes at the Bank of England that the medicine that they're dishing out at the moment is really starting to work. But that medicine is causing the pain, and that's these rising recession risks. So they will be worried that they may be hiking rates too much. So I think this data justifies the holding of rates last month. It was the first time after 14 sessions that they decided not to hike rates. So it looks like that decision was justified by these data. Going forward, it looks like we've peaked, but there's a big uncertainty, and that's oil prices. The tensions in the Middle East are already driving oil prices higher. If those tensions intensify, if the whole thing escalates, then you could get oil prices rising, and that's going to worry policymakers. So that's the big thing to watch out for. What's the oil price going to do for the inflation outlook? We just don't know yet.
We've been talking about that a lot here on Business Live. Where's the growth going to come from, Chris? Because everything is so sluggish and we're moving into an election year. Next year, where is the growth coming from?
Well, it's really difficult to see at the moment because you've got this lagged effect of interest rates still going to hit. You've got a lot of people will be remortgaging over the course of the next year, and that's going to hit their finances, and that's going to dampen that consumer spending. So we think the consumer side of things is going to stay quite subdued. The inflation peaking should allow some extra spending to start feed through, but overall that picture is really weakened as the labour market continues to soften and that lagged impact of interest rates continues to hit. So you've got to look for sectors like manufacturing. It's a small part of the economy, but there is perhaps some hope here in that we've seen over the course of last year companies really being hit by around the world, the loss of export trade in particular, as companies are just removing the stock from their warehouses. They built up lots of stock during the pandemic. That stock is being wound down now. When that stock reduction finishes, you'll start to see companies start to order stuff again. That's what we're looking for in manufacturing. That should take place next year. But look, this is a small part of the economy. It's not going to be a big gun in terms of driving growth. There's a very marked absence of growth drivers as we go through the next year.
We'll leave it there. Chris, thank you very much. Chris Williamson, Chief Business Economist at S&P Global Markets there. Let's just move away from our business coverage to bring you some breaking news now. And two women who died following a collision on the M4 on Friday during Storm Babette have just been named by Wiltshire Police. They've been named as mother and daughter Cheryl Woods being 61 years old, and Sarah Smith, 40, from Caerphilly in South Wales. More on that when we have it. Back to our business coverage now and other news in brief for you. Shares in Barclays have fallen this morning after it warned of a fresh wave of cost cutting. The banker posted better than expected profits for the latest quarter, boosted by higher interest rates. It reported a pre-tax profit of £1.9 billion in the 3 months of September, just below last year's £2 billion profit. The bank also revealed that it set aside more than £430 million to cover expected bad loans. Demand for coal, oil and gas is predicted to start falling by 2030. That's according to the International Energy Agency. In its annual report, it said today that the global energy crisis and momentum behind clean technology were ushering in the beginning of the end of the fossil fuel era. The report also called on governments not to hinder the progress by weakening their climate measures. And Tesla has announced it's being investigated over claims that it misled customers over the range of its cars. Elon Musk's company said the Department of Justice had sent subpoenas ordering it to share details of its autopilot features, vehicle range and other matters. Tesla also revealed that its capital expenditure for this year would exceed the $7 to $9 billion that it had predicted earlier this year as it steps up production and prepares to roll out its new models. Time now to have a look at how the global markets are trading this Tuesday morning as investors keep a keen eye, of course, on events in the Middle East and rising US Treasury yields. More on that in a few minutes. But first, overnight in Asia, equities slipped to their lowest levels, I should say, in more than 11 months. Even though they're finishing slightly to the upside, the Hang Seng closing down by 1% there. Trading is underway in Europe right now. The markets were certainly inching higher on the open. Highlights included upbeat earnings from the luxury goods maker Hermes and the Italian bank UniCredit. You can see all four of the major bourses are trading higher to the flat side, really. Here in London, the mining-heavy FTSE 100 is also tracking higher metal prices, even though it has just dipped down into negative territory now after those steady unemployment numbers. One standout certainly to talk about is Barclays. We talked about that just a few minutes' time. The UK's second biggest bank, trading lower at one point at least by 6.8% after posting weaker third quarter earnings compared to a year ago and sliding revenues from its investment bank. It was down 6.8% at one point. On to the foreign exchange market for you now, the currency market. Dollar weakness has remained a real trend of late after being seen as a safe haven. Bit of a mixed bag right now. The pound is down against the dollar. The pound is slightly higher against the euro, and you can see the euro there is trading slightly lower against the dollar, nearly at 0.4%. Chris was talking about oil a few minutes ago and concerns of its inflationary impact, potentially if the situation escalates between Israel and Hamas. The price of Brent crude now trading at 0.6%, so regaining some of yesterday's losses at 90.36. Time for some expert analysis of all those numbers. James Boulter, Senior Investment Director at Investec Wealth and Investment UK, joins me now in the studio. Good to have you on this morning. Let's just go straight to the bond market. We've been tracking this closely, particularly in the United States, even though we're not completely au fait with US Treasury yields and the likes. But what is happening, in your opinion, in terms of the bond market?
Well, I think this is the most significant thing that is happening in global markets at the moment, and it's centred on US Treasuries, as you say. And we crossed another important threshold yesterday, and that was on the 10-year Treasury. This is the rate at which investors, in effect, lend to the US federal government, and that crossed 5%. In early European trading yesterday. And that's a very significant level. The 10-year is seen as a benchmark globally, and it informs how investors feel about other markets as well.
What does it mean then? I mean, what kind of analysis do you take from that mark being broached?
Well, the reason it's happening in part is simply that investors expect interest rates to be higher for longer. In that familiar phrase, they expect that interest rates will be at higher levels for an extended period now. We need that to fight inflation. And there's a specific technical reason why this is happening as well, which is that there's a greater uncertainty attaching to what future interest rates will be, and this it increases something called the term premium, and term premium reflects uncertainty. So it's one reflection of the fact that there's increased uncertainty in markets.
But it has an impact, doesn't it, for governments, because it costs them a lot more money to borrow money, but also for regular borrowers of money too, particularly in the UK as well. What impact could it have on us here?
So the gilts market, which is the UK government bond market, historically tends to track the US Treasuries market reasonably closely. We saw a departure from that very famously just over a year ago during the Truss administration, when gilts traded at much higher yields briefly. But in general, there tends to be quite a high degree of correlation across Western bond market. So it does have an impact. Actually, as it happens, gilt yields have not been going up quite as quickly as Treasury yields recently. And this is because in the summer we had, I would describe it as a bit of British exceptionalism around rates. We expected that rates would be higher in Britain for longer. Perhaps than elsewhere. And what this represents, what this move higher in US rates represents, is in a sense the rest of the world catching up with where we were in the UK, with that expectation that rates will need to be held higher to contain inflation.
OK, let's have a look at commodity markets. Gold's been really interesting. It's a safe haven, as we know. In times of geopolitical turmoil, people tend to put their money in gold. What's it doing right now?
So gold is a haven asset. It also historically has some relationship with interest rates. So the fact that gold has been performing pretty strongly despite the fact that rates are higher is interesting, because usually higher rates would slow gold down. So perhaps that indicates that demand for gold is really strong. Other haven assets are in demand as well, and of course the US dollar itself is a haven asset. So if we measure gold in dollars, we're not at quite the highs that we reached earlier this year. But if we measure gold in sterling or euros, we were flirting with record highs for gold in sterling and euro terms last week, which I think is quite significant.
PMI numbers out today, unemployment numbers out today. What are your thoughts on interest rates in the UK?
So I think the market has come round to the view that the Bank of England, for the time being, is most likely done on rate rises. There's a lot of uncertainty attaching to that. If you go back to November of 2021, this was before the Bank of England started raising rates. Andrew Bailey, Governor of the Bank of England, said, in effect, don't worry, guys, we're not going to get to 4 or 5% interest rates. Well, now we're above 5% interest rates. So I think it's difficult to put a lot of faith in predictions about what might happen, especially with the myriad uncertainties. But the market's expectation at the moment is that the bank is done for now.
And looking ahead, we've got a slew of corporate numbers coming out from the States, the likes of Alphabet, Apple, Google. They're all reporting. What do all this say about the health of corporate America?
It's very important. It's very important to the stock market in particular, because you might know that the US stock market has been so dominated by a small number of stocks this year. The so-called Magnificent Seven, that's Alphabet, Apple, Amazon, Microsoft, Meta, Nvidia and Tesla. They make up the Magnificent Seven, and they're actually responsible for all of the gains, not just in the US stock market this year, but in world stock markets. So a lot of attention being paid to those, if you like, big beasts of the market jungle in the US.
We will look out for those when we do our market report later. For now, though, thank you very much, James Boulter, Senior Investment Director at Investec Wealth and Investment UK. Thank you.
Thank you.
Still to come after the break here on Business Live, the property industry calls for reform to help kickstart the UK's house building. Do stay with us.
And I'm Sky's US correspondent based here in Los Angeles.
It's turning everybody into, a crazy, violent drug addict.
How are you feeling?
I am angry. Legal abortion!
It is an anti-woman agenda.
2 women say that you paid for their abortions. Are you a hypocrite, sir? Will your candidates win?
I hope so. I think they will. I think they're great candidates.
I gotta be realistic. My sister's dead.
More than 4 weeks on, there's no murder weapon and no suspect. Are you going to catch this killer?
We are doing everything we can.
Ghislaine Maxwell has pleaded not guilty to all 6 charges against her. Mum, how are you feeling today?
Jeffrey said, you answer to Ghislaine, you just don't cross her.
We're so excited.
Severe nightmares of these people coming in and just taking me in the middle of the night.
I've watched as whole towns were torn apart by natural disaster.
I'm alive and I'm thankful for that, but there are a lot of people who aren't.
It's not the winds people fear most here, it's the water. We take you to the heart of the stories which shape our world. Do you truly believe what you're saying?
A lot of cases that I know are reported from Ukrainian missiles themselves.
Ambassador, with respect, I think that's preposterous.
Slightly minutes, slightly better. Fly Emirates. Fly better.
Thank you.
Hi there, welcome back. You're watching Business Live. Now, a short while ago, we brought you the latest unemployment figures. Just a few minutes ago, we have just had reaction from the Work and Pensions Secretary, Mel Stride. That's what he had to say.
Well, what's happening at the moment is unemployment is still at low to near record low levels. The number of those who are in payroll employment is at near record high levels. And we know that there are almost 1 million new vacancies out there waiting to be filled. So there is a pretty vibrant job market out there. But what my job is to do is to go even further, and particularly on economic inactivity, where, for example, we've seen a reduction in the number of economically inactive people of 270,000 over the last year alone, is to continue to encourage the over 50s, those with parenting, caring responsibilities, and the long-term sick and disabled to engage with the labour force.
Mel Stride just a few minutes ago. Now, leading figures from across the property sector are calling for radical reforms to kickstart house building here in the UK. A cross-industry white paper published by Brickflow sets out what it says is the first ever framework to solve the UK's housing crisis. It claims that 4.75 million homes are needed across the UK as a whole, while in England only 0.2% of the land is vacant to build on. Joining me now is the report author and Brickflow CEO, Ian Humphreys. Ian, good to have you on the show today. Now, you're labelling this report as an industry first. You say that your industry getting together because basically the government haven't. So why now?
Well, this has been in the making for 10 months, so it's coincidental perhaps that it's just come about after it became such a focus during the Labour Party conference. But we welcomed, obviously, the intervention by the Labour Party, but I think the report and what we'd like to see going forward is more meat on the bones from government or any political party as to how they're going to deliver the housing that we need.
But you've been pretty scathing of the government, right? You effectively say they failed in their job to produce, so you've had to do it yourself. And in this is very interesting, 15 different housing ministers since the Labour
in 13 years.
Is that impossible to work with?
Well, I think it shows that there's not really much respect given to the role, that it's used as a bit of a launch pad to something else. But I think housing generally is probably the most important part of any government policy, right? It affects every single one of us. The fact that we don't have enough housing means that people aren't living in the right conditions, they're living in squalid conditions, they're overpaying for their housing, whether they're a buyer or owner or tenant. Like the lack of housing has an effect on all of us.
We know the issues, and it's there's an extraordinarily high number of houses that need to be built in the UK. What is the solution, briefly, because we haven't got very long?
Yeah, sure. So the three main problems that came out of it were planning, land supply, and funding. And so the people that we've brought into this, the industry leaders like Knight Frank, PwC, who've all contributed to this report, we see this, as you rightly identified, as doing the government's work for them. So bringing together what we see every single day, people at the coalface, if you like, that bring in the problems that the house building industry sees. So land supply, as you correctly identified, 90% of the land in the UK is undeveloped, but only 0.2% is available to develop on.
The Housing Secretary, Michael Gove, when he was Housing Secretary, slammed developers for sitting on land rather than building new homes after an investigation found they're hoarding more than 1 million building plots. So what responsibility does the construction industry have for this? Yeah,
that's a good point. I mean, there is definitely a need for some of these projects to come to the market sooner. But developers are not going to build unless they think they can sell their product. And so things like Help to Buy, incentives like that, which help people get onto the housing ladder, are key. And we have the Autumn Statement coming up this month. What would you like to hear from the Chancellor, Jeremy Hunt? I think we'd like to see fundamental change in the way that we approach planning. So we'd like to see some investment into planning. We believe that the economy as a whole could really be much further ahead than what it is if we had correct planning. And that's probably just one of the quick wins from the report. But there's 10 points within the report, and we think that if the government or whichever party's in power took these seriously, that would actually bring forward the houses. And in a word, can it be done? In a word. It's hard.
Hard. Fair enough. We'll leave it there. Thank you very much for joining us.
Thanks,
Ian Humphreys, Brickflow's CEO. That's it from me for the moment. I'll be back in the afternoon for an afternoon edition of Business Live at 4:30. All the US markets there. Wilfred rejoins you now at the top of the hour, 12 o'clock, here on Sky News, with the very latest on the Israel-Hamas crisis. We'll see you shortly.